Good morning, Market Day Report on the air, and we're so glad you're with us here as we work our way to Christmas and the Christmas break. Now, we'll see limited trading tomorrow and then no trading at all as the exchanges are closed on Thursday. A full trading day, however, on Friday, but we don't expect much volume as volume really turns down at this time of year as we hit the holiday season. Okay, enough about me rambling here. Let's get to the corn market, and corn is still in higher territory. The exception there, the new crop December at 464.5. That's next year's crop. Will give us a little better indication based upon what happens with that contract over the next month and a half over whether we could see acres steady, more or fewer corn acres. What about beans? Right now, things kind of lean towards growing beans over corn if you can. The March contract, 1067.25. It's up 2.25. How about the wheat market? We'll hit these quickly. And the old crop March, half penny higher, 516. And here's Kansas City with the March contract, 524.25. It's up 3. We've got Minneapolis as well. It's mostly lower. And then here's the cotton market, and it's been on both sides, but higher right now. Our guest here in the studio, Chris Swift. Chris is with Swift Trading. Chris, great to see you again. The volume really drops off.
Oh, it does.
Between now and the first few days of the new year?
It does, yeah. I mean, we got a whole lot to look back on to see what we have come from in order to prepare us for what may come, in 2026. And probably the most interesting thing of the grain market was tariffs. April, we came out with tariffs, and we had not used those as a business model in a long time. So it kind of hit the market pretty hard. And with those tariffs on there, we found that not everybody was trading on the same platform. So we needed to make some kinds of adjustments. China said, well, you know what, if you're going to put tariffs on us, we'll put tariffs on you. We'll kind of see which back is a little bit stronger and stiffen up our necks. So what we found is it was not very good for our grain farmers. We hoped for a grain deal. We tried to find some alternatives with our biofuels, and a lot of those just kind of hit dead ends. We wanted a lot of trade deals. We wanted to get more usage domestically for our products, but we just couldn't seem to get that rolling. And then towards the end of the year, it got down to the nitty-gritty. We had to do something about it, and so the Trump administration comes in and tries to make last-minute deals, and whether they really are good for the United States or not, it just exposes how much in reliance we have on exports for our soybeans. And we've always known that. When I very first started my career, who do we grow soybeans for? China. Who's our second largest importer of U.S. soybeans? China. And it just keeps going China every single time. So we either have to find something more domestically to be able to consume some of that product, or we really need to be getting better trade deals.
I know you're kind of weaving that in for what's coming down the road, but planting decisions as we get to 2026. Any thoughts there?
They're going to be tough. I think you'll see the same number of acres out there because I don't think any farmer is ready to give up farming just yet. And we know that those acres went for a really high dollar. Was it last week or the week before last? So there's no outside incentive to say, no, we're not going to plant corn if we're going to pay that kind of money for our acres on it. So I look probably the same number of acres where there's a slight division between more beans or more corn. I don't know. South America will probably help us make that decision with their crop. If it is as big as what we think that it could be, we may have to rely a little bit more on corn because we do have more domestic usages for corn than what we do soybeans right now.
One area that we're struggling for on the domestic side is we've just got a smaller herd on the cattle side. So how about we take a break? We'll come back in a moment. When we do, we'll pick up that conversation with Chris Swift. This is Market Day Report. So as we look at live cattle, we keep in mind the cash trade. Again, that December contract, as it expires in a week, will try to be expiring at the same level that cash is trading. Well, we traded cash last week in the north. Didn't really have anything in the south. Doesn't look like we're doing anything in the south this week either. So what's live cattle doing? Well, right now, it's trying to figure it out. 230.20 at the bottom to 230.57. Again, thinking we might be in that 230 range, though asking prices in the north are already 232. The bids have been 228, so that's how we end up with the 230 there. We are lower across the board on very light trading here in live cattle. For feeders, January 345.70, that's 80 lower. 47 lower on the March, 340.02. Both of these markets higher for 2 straight sessions. By the way, we'll get a quarterly hogs and pigs report 3 p.m. this afternoon. Hogs are higher. Chris Swift with Swift Trading in studio with us. Hey, let's play this game that we did earlier. A look back at 2025 and then a look forward to 2026. Let's start with the rear view mirror. What did you see?
So clearly, the very first start about this time last year was a screw fly. So they shut the Mexican border down. We've jockeyed back and forth all the way through almost till February, March of this year. And then they finally said, we're just going to shut it down for good. And so far, it's stayed that way. The length of time that it has been shut down now kind of makes you wonder, have they shifted in their production capacity down south there that says, well, if we're going to have to keep these animals, we're going to have to feed them, process them, and do something with them. And I think that is happening more and more. When we saw the cattle on feed report, we saw a stark division between cattle placed in the north versus cattle placed in the south. That's going to continue. We've already seen processing production start to come back just a little bit with the Tyson closure, with some of the other plants. The JBS, I think, was just a secondary facility in California, but all those start to make an impact. And so now we look at the production side of it and go, wow, if we've got that few of cattle when we know that we have increased production in the South, how do we fill that? And so I don't know. I think everybody kind of knows the answer to it, but it's difficult to say that not everybody's going to get cattle out there right now.
All right, let's look forward now to 2026. What do you see for the industry?
Probably herd expansion. That's what everybody seems to want on there. Fewer numbers to contend with when we go into the slaughter cycle on it, but continued increased beef. Listening to Cattle and the Cattleman last night or the night before last, I think it was last night maybe, they discussed the dairy on beef, beef on dairy, and it was phenomenal. All of the great efficiencies that they have there, the profit potentials that they have there, and the weight gains and the improvement of the quality of meat, grading a whole lot more choice now, and that is the way it mostly is. Everything is grading choice. We are feeding cattle so long. I anticipate first quarter beef production to be very close to first quarter of 2025 simply because of those increasing carcass weights.
Yeah, and here's something else I didn't know. Corey Geiger is with CoBank, dairy expert there, and he explained how they've refined that beef on dairy cross to where the animals fit perfectly in the production chain as we go into the harvest. Whereas you can't just mix it, mix and match around. They've got the genetics exactly the way they need it.
Well, it's a vertically integrated supply chain. It starts from the time that calf is born all the way to it's slaughtered. And probably the efficiencies there are so great, and that does keep you. So now I don't have 2 or 3 cattle that are going to weigh over, and I've got some that are lighter. They're all very, very uniform.
Okay, this is the biggest question of all. Any market, okay? Any market out there, any commodity market, you get one contract under the tree. What do you want?
I'd probably buy a June or a July milk futures.
Okay. June or July, is this class 3?
Class 3.
Okay.
Class 3. It's probably has the least amount of production that we've had out there. They need more, and I think they're going to start slaughtering more dairy heifers out there. And if they do, or dairy cows, let me rephrase that, dairy cows, then I think we could see a pretty good size jump in milk prices. And at 15, they're under $16 a pound right now. So at 15, and this time last year we were in the low 20s. So I think that would be something to look for.
I like it. I was going to say pork bellies, but we haven't traded pork bellies in
pork
15
What's
years.
your favorite Christmas movie?
Trading places.
Absolutely, mine too.
All right, there you go.
Without a doubt.
Chris Swift is with Swift Trading.
Thank you guys for the entertainment and the advice and information. We appreciate it.